Imagine this, there are over 10 million vampires living in America right now. Not the blood-sucking ones from movies, but something far more real and far more dangerous. These vampires don't bite your neck, they drain your tax. Money silently, legally, systematically. They're listed as 120, 200, even 360 years old in official US records. And according to the data, they're still alive, even Elon Musk couldn't ignore it. He said, "Feels like America's full of vampires." In just one recent case, the government sent $127 million to over 3,500 dead people. But here's the twist, they don't exist. And that's just the beginning. From billion-dollar COVID frauds and luxury cars bought with relief funds, to Wall Street legends who scammed Hollywood elites and walked free for decades. This isn't a broken system, this is the system. Built on fake identities, ghost companies, and blind trust, where scammers don't hide in the shadows. They wear suits, file paperwork, and live among us. And the strangest part, many of these people are still collecting pensions and receiving social security checks today. So ask yourself, how does a nation with the world's most advanced systems lose hundreds of billions overnight? The answer will haunt you. Guys, if Mr. Beast came to you and said, "Give me $1,000 and I'll invest it for you and return profits," so, will you give this handsome amount to him or not? Let me guess, I am 100% sure most people give him the money, even blindly. Now let's go back to 1960 when something similar happened in America. You must know about Bernard Lawrence Madoff, who was an American financial criminal and financier who was the admitted mastermind of the largest known Ponzi scheme in history. Bernie Madoff started trading penny stocks with $5,000 of savings and another $500 borrowed from relatives and his friends. Once he made good profits, he opened a trading firm offering market consultations and investment services. He offered such high returns and took such low brokerage fees compared to other brokers that more and more people started flocking to him. You will be shocked to know that by 1992, the Wall Street Journal reported that Madoff's firm executed $740 million in trades per day. At one point, his firm handled 9% of all trades on the New York Stock Exchange. So the question is, how did Madoff outperform other investment firms and offer so much with low margins? The secret was unbelievable. His profits didn't depend solely on commissions. He earned massively from trading spreads. Let me simplify this. For example, John wants to buy the paper stock at $51, and another person, David, wants to sell it at $50. If a trading firm buys from David at $50 and sells to John at $51, that $1 profit goes to the firm. This is called the spread. But Bernie Madoff wasn't just another Wall Street genius. He was making money faster than anyone else in the game, and not just with risky baits or lucky picks. He was offering a consistent 18 to 20% return even on large cap investments, the so-called safe zone of the market. Now pause and think about that. In the volatile, unpredictable chaos of the US stock market, no one, not even the best hedge funds, could match those numbers. To put that into perspective, over a 10-year period, the S&P 500 gave an average return of just 16.3%, and that's considered solid. Yet Madoff, he outperformed it, reliable, smoothly, without fail. His safest investment funds made other firms look like amateurs, so it's no surprise that the rich, the famous, and the powerful all jumped in. Hollywood elites like Steven Spielberg, Oscar-winning screenwriter Eric Roth, TV legend Larry King, they all trusted Madoff with their millions. Because who wouldn't? When everyone else is giving you 8% and one man says, "Here's 20% guaranteed," he becomes more than a fund manager. He becomes a messiah of money. But what if the miracle was fake? What if the world's biggest financial names were unknowingly pouring billions into a fantasy, a trap, a lie, because soon it would all come crashing down, and when it did, it would take $60.8 billion with it. And trust me, that wasn't even America's biggest scam. By November 19th, only $300 million was left in his account, with $320 million in withdrawal requests pending. Eventually, on December 11th, 2008, Madoff was arrested. And guess what the value of this scam was? Not $1 billion, not $10 billion, but $64.8 billion. Still think that's the biggest? Think again. Because the COVID relief fund scam in America was even bigger, worth over $96 billion. Now, let this sink in. The WHO's entire pandemic budget was just $6.83 billion. This scam, it was worth 10 times more. Now think back to COVID. Every country rolled out relief money to help people survive. In the US, there were two big ones. First is PPP, or Paycheck Protection Program, which helps small businesses keep paying workers, and the second is unemployment relief, which is for people who lost their jobs. And guess what scammers went after both? Well, if we talk about the US government, it is allocated $800 billion for PPP and $900 billion for unemployment relief. But when NBC News started investigating how this money was used, they were stunned. The year 2008 marked a turning point for Bernie Madoff and his financial empire. Despite the chaos in the markets, he claimed that his assets were growing by 5.6%, even as the New York Stock Exchange faced its worst collapse in history, plummeting by 38%. Investors were losing their savings around him, but Madoff insisted his returns remained steady. This made many people trust him even more, thinking their investments were safe. However, problems began to surface when a wave of clients started to withdraw their money. At first, Madoff seemed to handle the withdrawals smoothly, but as the financial crisis deepened, the requests grew larger and more urgent. Soon, more than $1 billion was requested to be taken out of his fund. The situation quickly spiraled out of control. It became clear that something was wrong. Madoff was not using investors' funds to buy stocks or bonds as promised. Instead, he was sitting on the money, not investing it at all. This caused panic among investors. Many feared losing all their savings. Their confidence started to crack as doubts grew that they might never see their money again. It was during this time that the truth was finally revealed. Madoff had been running a classic Ponzi scheme. He was not making money through investments or trading. Instead, he was using new investors' money to pay off older investors. It was a scam built entirely on the hope that new money kept flowing. The roots of his scheme deepened back to the early 2000s, around the time the US stock market changed how trades were made. The New York Stock Exchange began allowing trading in decimal points, meaning stocks could now be traded in cents instead of fractions like 1/8 or 1/16. Before, traders bought and sold stocks in these small fractions, which kept spreads. The difference between buying and selling prices higher. After decimalization, the spread shrank dramatically from about 12.5 cents to just 1 cent per trade. This change made trading cheaper for investors, but cut into the profits of many brokers and fund managers who relied on those spreads. For someone like Madoff, who made money by collecting fees based on the volume of trades, this shift sliced his income drastically. Surprisingly, despite this reduction, his clients still reported high returns. This was strange, considering his earnings had sharply dropped. It seemed as if Madoff was shielding his clients from the true picture, keeping the illusion of consistent growth alive. As the financial crisis worsened and withdrawals increased, warning signs became impossible to ignore. Investors demanded their money back, expecting quick responses. But behind the scenes, Madoff was not reinvesting or growing his assets as he claimed. The truth was far more troubling. When the scheme was finally exposed, it was found that he had been hiding his inability to generate real profits all along. The entire operation was a carefully maintained lie. Instead of making genuine investments, Madoff used incoming funds from new investors to pay off older ones, fueling a scam that had lasted for decades. His fraudulent scheme finally unraveled, costing thousands of people their savings and shaking the entire financial industry to its core. In Miami, they found 29-year-old David Hines, He didn't run a business. He wasn't an entrepreneur. He was an addict with 0 employees. But thanks to the PPP Relief Fund, he got $3.9 million for a company that didn't even exist. How? He just filled out a form on the government website. Then the money started flowing. He bought a Lamborghini. Huracan worth $318,000, lived in luxury hotels, splurged on jewelry, designer clothes, and even dating sites. All with your tax money, and it wasn't just him. Another case in California. A couple steals $18 million in COVID relief funds. With the money, they go full Hollywood, 3 luxury homes, stacks of diamonds, gold coins, watches that cost more than cars, and furniture fit for royalty. But just when justice was about to catch up, they vanished on the day of their sentencing. They cut off their ankle monitors, walked out the door, and left their own kids behind. The FBI says they're still on the run. This isn't just fraud. It's a real-life crime thriller. This was a shopping spree funded by a global crisis. Now, meet Elias Ildabiga, tech guy from DC with no criminal record. He tried to steal $17 million from COVID relief programs. He had a degree, tech jobs, and even drove a Tesla Model 3 paid for by fraud. While out on bail, he allegedly tried to scam a bank too. Now, he's back in jail. Still says he's not guilty. How did this happen? The government rushed to send out money, no proper checks, no questions asked. In one insane case, Danielle Miller copied a real business, used her own bank account, and got $100,000 in just 40 minutes. No one even checked. She wasn't alone. Fake names, fake companies, real cash. Scammers bought cars, jewelry, vacations, everything. Experts say the total fraud between $170 to $480 billion. Possibly the biggest scam in human history. And the wild part, it wasn't foreign hackers. It was Americans, so these were just a few of the biggest scams in American history where a mix of government carelessness and calculated manipulation led to the loss of billions in record time. Whether it was pandemic relief fraud, fake businesses, or overhyped miracle products, the common thread was clear: lack of proper oversight. When systems meant to protect people become too fast, too loose, or too trusting, scammers strike hard and walk away richer than ever. These stories show how government inefficiency in any part of the world can come at an enormous cost. And it's not just about money, it's about trust. Taxpayers expect their contributions to build schools, fix roads, and provide healthcare, not fund Lamborghinis, luxury vacations, or ghost companies. In some cases, the amount lost was so staggering, it exceeded the GDP of entire countries. And the worst part, once that money disappears into offshore accounts and luxury assets sits, almost impossible to recover. It's a painful reminder that even the most powerful systems can be exploited from the inside. And unless lessons are learned, history is bound to repeat itself, just with new faces and even bigger numbers. So guys, what do you say about these US biggest scams? If you enjoyed this video, don't forget to like, share it with your friends. Subscribe to this channel for more interesting information, and never forget to turn on the notification bell so you never miss an episode. I'll see you in the next episode. Until then, bye.